Welcome everyone to a new update, and today we'll be covering everything you need to know about the current price action of Bitcoin, as we are down a lot since the previous all-time high. If you like what we're doing, please make sure to subscribe to this YouTube channel and like this YouTube update beneath. And also, if you are enjoying the content, we are making a trade ladder 3 times a week, which you can test for free. It includes altcoin setups, market analysis and way more. The same is also possible for our premium membership. You can test it for 1 week for free, and it includes everything you need to know about my personal portfolio, trade IDs and even more. This can also be tested for 1 week for free. In this video and in this update, we'll be covering the recent price action of Bitcoin, but we're also going to dive into the DXY, some important topics you'll need to know about inflation, and finally, we'll be discussing technical analysis on Ethereum as well. First, we'll be diving into general background information on the recent price action of Bitcoin. We can clearly say that the recent price action of Bitcoin wasn't fulfilling for many of us, as the prices have been dropping 80% since the previous all-time high. Ultimately, the Fear and Greed Index has dropped towards lower boundaries again, as we have hit 20 today and the measurement goes from 0 to 100, through which anything low states bearish sentiment. This has resulted into a sentiment switch, as most of the markets and people involved in the markets are projecting a continuation of the downward spiral at this point, and that's not unwarranted, as the markets have been seeing tremendous amount of weakness lately. Ultimately, that says a lot, and if you want to invest into crypto, probably some good times to look at investment opportunities across the board, as the entire world is focused on an energy crisis, inflation, strong dollar and even more. Let's dive into some of the background behind the markets at this point. Last Friday we've had a speech from Powell discussing the current policy of the Fed to combat inflation, and as a result we've seen markets been tanking since, as Powell stated that he won't stop with the hikes of interest rates if inflation is not coming down. Question is, will we see inflation coming down, and what's the primary reason for the current rise in inflation? Well, we're at peak inflation currently, as Europe is fighting an energy crisis and increased inflation with numbers of 10 to 50% a year. Why is Europe worse? Well, the Fed and the US are currently having a policy to reduce inflation and hiking intensively, so yields are going up on government bonds, as those terminal rates should be in line with the policy of the Fed. This makes the dollar and the US more attractive for risk-free investors, as they gain on their positions in those government bonds in terms of yield, and additionally de-risk themselves for currency risk, as all currencies have been falling significantly against the dollar. The inflation in Europe is therefore higher due to the fact that the US dollar is used for pricing products across the world. If oil, for instance, is tanking in the US dollar, Euro USD drops 20% a year, prices won't fall in Europe. Going back to the Fed, previous meetings he announced that they will rely on data to come out, and that he might reverse policy when inflation comes down, and probably even use QE again beginning 2023 to push the economy forward, as next year we'll probably see deflation as oil prices are dropping. However, due to the speech of Powell, the expectations for coming Fed speech on September 21st have adjusted. Investors are expecting another 75 bips rate hike, and they are expecting another 50 bips to be happening in October, making the expectations bearish for risk-on assets and bullish for the dollar as a whole, and the dollar has been running swiftly. Now, inflation is most likely already falling down due to several reasons. First of all, oil is dropping significantly, and additionally countries are looking to solve the high prices and might put a barrier on those prices for imports from Russia, which could push down prices even more. Currently, crude oil prices have fallen more than 20% since the recent high. The impact on inflation always requires 2 to 4 months before you'll spot that impact, but oil is a crucial one. Second, energy prices have peaked in Europe, and those are also starting to fall significantly, as we can see in the chart. Within a matter of 5 days, the power prices in Germany have been falling swiftly. The peak was at 1,000 euros per megawatt hour, while 5 days later the prices are back down below 600 euros and have dropped almost 50%. This means that we're getting close to the peak of that as well, including a potential top on oil, which will be falling down and therefore reducing inflation, expecting even deflation to come in the coming years. Why deflation? Well, if we look at the price of a barrel of oil, if June is $120 and we fall back towards $70 next year, prices are way lower, resulting into negative numbers and deflation actually. Ultimately, temporary heavy inflation taking place at this point, making the markets extremely volatile. Let's have a look at the impact of the dollar at this point. Historically, the US dollar currency index, which aligns a lot with the Euro USD as that's the primary reason for the movements, it has been seeing rallies, and those rallies are not suitable for price action of Bitcoin. Right now, the DXY index has bottomed in May 2021 and surged more than 20% since. In the chart, you will see a comparison between the strength of the US dollar and the price action of Bitcoin, which ultimately has resulted into a heavy correction of Bitcoin of almost 80% and a heavy surge of 20% on the dollar. Historically, every bear market of Bitcoin aligned with strength on the US dollar. In 2014 and 2015, a heavy surge of almost 20% on the dollar resulted into a heavy bear market on Bitcoin as well, as that one collapsed with almost 80% too. In 2018, relatively the same can be concluded, as strength has been shown in that period on the dollar, resulting into weakness on Bitcoin. Ultimately, during Bitcoin bull markets, the dollar has been showing weakness, and that resulted into strength on Bitcoin. If we link this back to the policy of the Fed, it seems very reasonable to assume that we won't be lasting with this policy for a long period from here. Of course, September a hike is possible to finalize, but as inflation will be dropping down, we'll probably see the impact of the current policy in the economy, which means that we'll be going to see increased unemployment numbers, worse financial numbers, and more. That's the second important part from the Fed, which is not only inflation, however now it's on inflation. Basically, the worse the data will be coming the next months, the heavier the Fed will adjust the policy. I assume that we might be getting a heavy rate hike in September, and 75 bips is also concluded and priced in, while discussions are made that it's getting less relevant and 50 bips is more relevant, and that we slow down policy after September. Finally, based on price action, we'll have to watch what the dollar and Euro USD are doing. The DXY index is looking at a potential reversal soon, as the monthly is getting into territories with the RSI we've not seen since the peak in February 2015, which was ultimately the bottom of the bear market for Bitcoin. The weekly is looking at a potential reversal, but it's all depending on the coming weeks and whether or not the DXY drops beneath 108.6 points. In the end, Euro USD has to reverse too and reclaim 1.01, as that could be a trigger for other currencies, including Bitcoin, to have some momentum. Let's dive into the crypto markets. The monthly has closed on Bitcoin, and it is not the most bullish chart we've ever seen, as the previous all-time high of 2017 is still holding as support, barely. If we look at the weekly chart, Bitcoin has been trending above the 200-week MA, but dropped back and is fighting support again. This can lead towards a potential double bottom structure, but we have to see whether that's the case after confirmations. The scenarios will be discussed in a little bit. However, historically, September has been bad. The past 5 years we have been seeing a significant correction in September, but this data can't be used at all, as current circumstances are completely different than the past 5 years. Going back to the charts, we've seen that Bitcoin dropped beneath the 200-week MA, and we haven't been acting beneath that level at all since its existence. More importantly, watching the total market cap chart makes more sense, as that one grants more information on this. The total market cap is showing support is around the corner, as this one kept the 200-week MA as support and rested on the previous all-time high too. Currently, a higher low and retest of the 200-week MA seems reasonable to hold, and therefore a suggestion around a potential bottom might be in, while most of the people are anticipating a crash towards 12k, which could be possible. Let's finalize this update with the scenarios we can watch on Bitcoin and Ethereum on lower and higher timeframes. As we saw in the markets and in the previous charts, we have concluded that Bitcoin is definitely heavily trending down. And in this chart, you can see that we've got the 200-week MA that is currently not helping as support, as we are acting beneath. And if we use log chart, we can definitely see that we've not been acting beneath this heavy at all. Makes me believe that Bitcoin is the cheapest at this point. If we're looking at the levels, weekly level here, previous all-time high resting as support, which is ultimately a crucial support level to look at. If we are going to lose that level, you're probably looking at 12k for the next support zone. However, we also concluded that during the previous bear market, people were anticipating a crash to happen towards 1k, which is comparable to the level of 12k at this point. When we're looking at the markets for Bitcoin, there are a few scenarios that we are looking at. First of all, we've got total market cap with a potential retest taking place at the 200-week MA. As we can see here, if we have that retest resting as support, it seems very likely that we continue this upwards run, or at least have another test at 1.2 trillion. If we're looking at Bitcoin, and we're looking at the weekly time frame, and I'll just erase the 200-week MA, there are a few scenarios that we could be looking at. First of all, if we definitely are losing this level, 12k is next. If we have another drop down, we are potentially going to create ourselves a bullish divergence here, which probably leads also to a bearish divergence for the DXY, and then we're going to look at a trigger for longs. So when we're looking at the higher time frame, the first scenario that you look at for entries is that we sweep the low and then reclaim 19.5k. So this reclaim is definitely a trigger, because then we're anticipating a reversal. This will probably also be called head and shoulders pattern or confirmation from the bull diff that is anticipated here, and then we're targeting 30k as the next resistance. So remind yourself, in May we were acting at 40k. We crashed primarily due to the fact that 3AC, Celsius and Voyager had forced selling. So scenario 1 is based on the weekly time frame, which is another dip into this support zone, at least have a sweep beneath 19k, in which we result into a reclaim as a trigger. The second scenario is that we won't be having this and that we sweep beneath and continue to fall. Then I'm looking for the exact same scenario at 12k. However, the odds are relatively low that it has to be happening at this point. Those are the two primarily scenarios for Bitcoin for me here, based on the weekly time frames. When we're looking at the daily time frames, we can essentially see the same. And I'll just get a clean chart going. What we see is the heavy support zone that we have at 19k, right? We've got this support zone. Sweep of the low here in this territory and then reclaim is obviously the first trigger, as I discussed on the weekly time frame. The second trigger that we have, and that's also what I discussed on the live stream earlier, is you can already look for longs in this range. But if we break through 21.4, which is the crucial one here, most likely we are going to overshoot all the way towards 23k. And if we overshoot towards 23k, the flip of 21.4 is a trigger as well, looking for 29 to 30. If we don't have that sweep, or if we have any move here and fall back beneath, the retest here is your ultimate short trigger. And then we are going to look for that sweep here again to actually close the TPs, or we're looking for lower lows. So these two are the ones that you're looking at, and right now it's pretty much heavily boring and just waiting for volatility to kick in. When we're looking at even lower time frames, and then I'll just get another chart going. If we're looking at 4-hour time frames, we can't make much out of the current price action when it comes to Bitcoin, as we are resting on support here. Technically speaking, the best case is that we sweep, reclaim, that is a trigger. Then we are also resting on the lower boundaries of this range. If we do hold here and start to run back up, then the 21.6k level is still the primary scenario to look for longs. But if we look at higher time frames for altcoins overall, they are making double bottom structures, and if they start to have a slight reversal, and if Bitcoin is able to get towards 22k, the strength is going to be significant on them. And in one of them that is showing strength is Ether against Bitcoin, which is holding support level here. Area that had to hold is currently holding. We are seeing a bounce and a very strong candle based on the 3-day time frame. The crucial level was holding here, and technically speaking, the area that you wanted to be holding is the area around 0.075. If that continues to do so, I'm assuming we continue the impulse towards 0.10, especially with the merge coming up. So you're probably looking for ETH longs too, and this scenario also still stands, in which Ether has to hold the crucial level around 1350. If that happens, and we could still have a higher low taking place like 1470, 1460, or we sweep this high and then the scenario also stands here, and then we are assuming continuation towards 2200. So that's the scenario part for Bitcoin and Ether. Let's dive into the conclusion. Coming to a conclusion of this update, we don't know where the bottom is, but I'm all sure that if you start investing into crypto nowadays, it is a good chance. Historically, if something went down 80 to 90% and fundamentally is still growing, which we are also seeing in the crypto markets, that is the period where you want to invest into crypto. And right now we can see that as well. Although economics are looking bad, macroeconomics are bad too, and the shape for the coming years are a little bit difficult and making it more complex to have that trust. But all I know is that if you don't believe or don't trust the actual buy that you do and you feel feared, the better the actual financial opportunity is. And yes, most are waiting for 14K and most are expecting a continuation on the dollar. But I think that we are actually getting towards the end of that policy and that we are going to reverse and have a deflationary state for 1 year next year if oil is definitely going to go down. At the end, if you like this content, make sure to subscribe to this YouTube channel, like beneath as well. Lots of changes are going to happen on this YouTube content and YouTube platform. If you do have any comments or if you did like this update, make sure to do that in the comments beneath. And I'll see you again tomorrow in a new live stream at 10 a.m. in the morning. Ciao!